GDP has been crashing, but there is something that everybody is missing outside of just pointing out the fact that GDP is down historically after going on a potentially generational run here. And everybody's freaking out about GDP, saying, hey, is this a big economic slip? Is this the sign of a lot of uncertainty? Trump and Biden allies divided after GDP calls down. GDP shrank an annual rate of 0.3% in the first quarter of 2025, marking the first decline in 3 years. Experts attribute the contraction to a surge in imports as businesses stocked up before Trump's tariffs took effect. Despite the decline, key economic indicators like consumer spending and business investment showed solid growth. Economists predict slower economic growth later this year, with some forecasting a mild recession due to the tariffs. And I think it's interesting that a lot of different people, economists alike, all the headlines, they are fear gauging you guys to believe that we're in a recession because of these tariffs. In fact, Amazon is even posting how much everything is more expensive because of the Trump tariffs. But in reality, if you look under the hood, Amazon is partnered with this arm of China. So everything is somewhat connected here. So you guys just have to follow the Skrilla Manila to know exactly what is going on in the economy. But you don't have to worry about you doing it yourself. I have done it, so you guys don't have to, because the U.S. economy had just its worst quarter in 3 years as a cloud of uncertainty been forming amid Donald Trump's seismic policy changes. And the stock market has been on a slide today after several days of positive results. The country's GDP, the value of all goods and services, shrank 0.3% in the first time. In the first 3 months of the year, down from 2.4 increase at the end of last year. So this is a key indicator. Everybody looks at GDP, right? Oh my God, it's crashing and burning. The GDP is going all down. The economy, it's over. But what are something that a lot of people are missing here, right? What is GDP? Let's take a step back and go back to the basics, folks. Well, the G in GDP stands for government spending. And what do we have here, folks? We got the Doge clock. How much is the Doge saving the taxpayer? Look, it's not making significant headwinds here. It isn't. I'm not going to come and lie to you guys and say that the Doge cutting all of this government spending has made everything peaches and daisies. I mean, look at the differences in the magnitude of these numbers. We're seeing that the Doge is saving $3,366 per taxpayer, where the debt per taxpayer is literally 100x that. So we're not quite where we need to be with where the Doge is going, but that could be a major factor of why we are seeing this, why we are seeing government GDP, the government spending down dramatically. So the Atlanta Fed's GDP Now tracker of the incoming data is indicating that GDP shrank by 1.5% in the first quarter. While the tracker is volatile through the quarter and typically becomes more reliable later in the quarter, it does not coincide with some of the other indicators showing the growth slowdown. So the early economic data, we've seen this for a while. Is it going to be negative? Is it going to be positive? They believe it's going to be negative. And, you're looking at it, it is, right? So while the tracker is volatile and typical becomes more reliable as we go down, the sobering notwithstanding in the inherent volatility of a very high frequency nowcast maintained by the Atlanta Fed. And a lot of this, right, is because of a lot of the uncertainty. The market really sees things going back and forth. And what does the market do? The market tries to forecast what, the economy is going to look like. That's essentially what the entire market is it's just one giant forecast. And in reality, when you don't know what the president of the United States is going to do, like we've seen, right? then we're seeing a lot of volatility in the market. And because we're seeing a lot of volatility in the market, people don't know how to react. So when people don't know how to react, they generally just sit on the sidelines and tend to wait. So the US economy has suddenly been thrown into reverse as a key GDP indicator flashes stunning negative forecast. Look, it showed 2.3 growth days earlier. The sharp reversal of the fourth quarter when the GDP expanded, several economic indicators have been rising alarms. It seemed to be on solid footing, but it changed. It's raising the red flags. The most stunning came on Friday. So it all started to raise and come up with questions as that. And many people are always looking at this, right? They're saying, hey, GDP, it doesn't get negative unless it's a great recession. When GDP goes negative for multiple months on end, that's when we see a great depression because it was a long but unusually slow recovery. And that's the greatest reasoning because of all of these great recessions is that it's not necessarily the downfall, because the downfall might be something that happens very quickly. Shit hits the fan and here we are, right? The reasoning why all these things are known as the Great Recession, Great Depression, all of these things is strictly because of how long it takes for us to get out of these situations. So we see the last time that the GDP was negative before this year was the first quarter of 2022. And then it went positive directly again. So there's a lot of things, right? People are looking at this as saying the GDP shrinks for the first time. It's the trade deficit. It's the trade war that we're seeing. Consumer spending slows in the first quarter. You guys who are on this channel know that I've been covering how consumer confidence has been running very, very low. And so this is something that, we're going to potentially start to see. And, they're going to be sounding the alarm bell saying that this is, quote, the tip of the iceberg. I mean, come on. The U.S. economy contracted a little bit for the first time in 2025, the first time in 3 years. Look, it happened under 2022. Did we see these types of headlines in 2022? No, the biggest difference is that obviously Trump's in office and the tariffs, right? That is the biggest difference that we're seeing here. So I think everybody's sounding the alarm bells saying that everything's crashing and burning. We've got CEOs saying that there's already a recession. I think that there's just a bit of a slowdown here. And this slowdown has been healthy. We needed to see GDP shrink a little bit, and we have. The U.S. economy contracted, and GDP, the official report, shrank 0.3%. Look, the 0.3% isn't anything dramatic. We were looking at these headlines previously, right? Where the Fed, the Atlanta Fed, was predicting a 1.5% shrink. That got down to just 0.3. So although we're seeing the Fed and the GDP shrink, it's not as dramatic as we originally thought when everybody was sounding the alarm bells. This is the, quote, biggest trade war since the Great Depression that have stunted the economy and raised the risk of a recession. Economists warned that the growth could slow even further and inflation could rise if the disputes aren't settled soon. The biggest culprit behind the negative reading in the first quarter was a record surge in imports as U.S. businesses sought to bring in foreign goods before the tariffs. So the U.S. was importing a lot and lowering government spending. Thus, GDP was negative. It all adds up, right? McLovin in the chat, the GOAT, is saying they're peeing on a raging forest fire. I couldn't agree more. He said MSM and the Fed is clearly biased against DJT. And I mean, it's just the media in general always wants to sound the alarm bells. But gross domestic product, GDP, is a monetary measure, right? What does it look at? Consumer spending, investment, government spending. GDP is calculated right here through this formula. it subtracts the import of goods, right? Relative to the exports. Trump put all these tariffs on there, so they're trying to do the imports and get them all in here as quickly as possible. And so we see a negative GDP. It's just, it makes sense. If you really break down the data, you break down what you've been looking at, you break down all the situations that we've been seeing, these things tend to add up. We're seeing the Dixie come back up and come roaring back. We're seeing the Dixie start to come back up. That 0.4%, although we've had a historically bad start to this year, the strength of the dollar's inching back up day by day. And hopefully we will start to see that skyrocket even higher, because we're also seeing the just general market trends. It's relatively flat, right? I mean, over the past month, we haven't really done much. Year to date, we're down because everybody's worried about these trade wars and the tariffs. Right? Everybody is worried about the overall market conditions currently. But I think there's a bigger picture of this. The GDP, the percent change, you're seeing it start to go down, right? But I think these worries are really overblown. I think the GDP shrinking by 0.3% is really driven by imports and the takedown of spending from the Doge. Now, if you guys enjoyed this, please smoke that like button if you're here. I know you will, McLovin, so I appreciate you. But everybody else, smoke it. Hit that subscribe button. Tell a friend to tell a friend. Help me get to 1K subscribers very quickly, because I'm going to be bringing you guys daily updates on what is going on in the general market. And so follow along, and I'm looking forward to some more.